Hello, and welcome back to Boni's Life, the channel where we cut through the noise to bring you the sharpest insights in the world of finance and technology. This week, we're diving headfirst into the turbulent yet fascinating world of cryptocurrency. The market is sending us some incredibly mixed signals right now. On one hand, the fear and greed index is screaming extreme fear, yet prices are holding firm, even showing signs of life. It's a paradox that has many traders scratching their heads. Is this the quiet before a storm, or the calm before a major surge? Stick with me, because over the next few minutes, we're going to dissect it all. We'll look back at the technical landscape of the past week, unpack the calendar of critical events that will shape our future, hear what the big money players and top analysts are thinking, and most importantly, I'll give you actionable strategies to navigate the week ahead. Let's get started. To understand where we're going, we first need to understand where we've been. The past week in the crypto market has been a masterclass in volatility after the euphoric highs of late 2025, where Bitcoin flirted with prices near $126,000. We've seen a significant and, for many, a painful correction. Prices pulled back to test key support levels around the $64,000 mark. Now, for the seasoned traders out there, a 50% retracement in a crypto bull market is almost a rite of passage. It's the kind of shakeout that separates the tourists from the true believers. But for those who entered at the peak, it's been a harsh lesson in crypto's unforgiving nature. From a purely technical standpoint, Bitcoin has been carving out a contracting range, essentially a tug-of-war between buyers at the $64,000 support level and sellers at the $71,000 resistance. Think of it like a coiled spring. The daily charts are showing us some weakening momentum. Key indicators like the RSI and the MACD are both in bearish territory, suggesting that the bears haven't quite given up the fight. Ethereum has been playing a similar tune, mirroring Bitcoin's price action. It took a dive from its highs above $4,900, found its footing around $1,700, and has since clawed its way back to the $2,090 level. The chart is telling us a story of indecision, with a key battleground forming between the psychological $2,000 support and the $2,200 resistance. But here's the most telling and perhaps concerning piece of the puzzle: volume. Trading volumes on major exchanges have plummeted by about 30% since the end of last year. This means fewer people are trading. In technical analysis, a drop in volume during a consolidation phase is often the prelude to a very big move. The question is, in which direction? The weekly chart offers a glimmer of hope. Bitcoin is still trading comfortably above its 200-week moving average, a long-term trend indicator that has historically marked the floor during bull markets. So while the short-term picture is murky, the long-term structure remains for now intact. Now, let's turn our attention to the week ahead, because it is packed with events that could serve as the catalyst for that big move I just mentioned. First up, on the regulatory front, the winds of change are blowing out of Washington. U.S. Treasury Secretary Scott Besant made waves last week when he called the passage of a crypto market structure bill very important. He's pushing for Congress to get this done by the spring. This is a monumental shift. For years, the crypto industry has been operating in a gray area. The kind of regulatory clarity Besant is talking about could be the final green light for a tidal wave of institutional capital that is still waiting on the sidelines. Of course, this is Washington we're talking about, so don't hold your breath. The odds of a bill passing this year are still a coin toss, but the conversation itself is incredibly bullish. Speaking of institutional capital, Bitcoin ETFs are showing signs of life again. After a period of outflows, we saw hundreds of millions of dollars in net inflows last week. This is a crucial indicator. It tells us that the big money players are starting to dip their toes back in the water. JP Morgan is certainly seeing this. Their research team just put out a note with a very bullish outlook for 2026, predicting that renewed institutional demand will drive the market higher. They've even pegged Bitcoin's production cost at around $77,000, which they see as a fundamental price floor. Their long-term price target? A staggering $170,000 to $266,000 per Bitcoin. When a giant like JP Morgan talks, you listen. Now, let's get to the calendar because your trading week will be defined by these dates. Monday is a holiday in the US, which typically means lower liquidity and potential for some wild swings in the crypto market. On Tuesday, the crypto world turns its eyes to Denver for the start of ETHDenver, the largest annual Ethereum conference. Expect a flurry of news and announcements that could send ETH on a ride. But the main event of the week is on Wednesday. The Federal Reserve will release the minutes from its January meeting. This is our window into the minds of the world's most powerful central bankers. Are they worried about a slowing economy? Are they eager to cut rates? Or are they still laser-focused on inflation? The language in these minutes will set the tone for all risk assets, including crypto. A hawkish tone could send us tumbling, while a dovish surprise could be the fuel for a major rally. We'll also get key inflation data out of the UK and jobless claims in the US later in the week, all of which will add to the narrative. It's going to be a week where the macroeconomic landscape is just as important as the crypto-native one. So, what are the smartest minds in the business saying about all this? To put it bluntly, the experts are completely divided, which in a way confirms just how pivotal this moment is. On the bearish side, you have analysts from firms like Stifel who are calling for a potential slide to as low as $38,000. They are looking at the declining retail participation and the lack of new buyers and seeing a recipe for a further correction. Bitcoin magazine recently ran a headline that read, "Bitcoin's not done bleeding," suggesting a move to $50,000 could be next. These bears believe that the market needs one more major flush out before a true bottom is in. But for every bear, there's a bull roaring back. Kip Herriage of Vertical Research Advisory is adamant that the bottom is already in, claiming he sees clear reversal signals. And as we discussed, JP Morgan is leading the institutional bull charge, looking past the short-term noise to a future of widespread adoption. Perhaps the most insightful take comes from Interactive Brokers, who noted that crypto is transitioning from a narrative trade to an institutional portfolio allocation. This is a profound point. It means we're moving from a market driven by hype and speculation to one driven by fundamentals and long-term value. And then there's the on-the-ground intelligence. Executives from the blockchain project SUI, speaking at a conference in Hong Kong, said that despite the market volatility, institutional demand has never been higher. This suggests a fascinating disconnect between the gloomy public sentiment and the feverish activity happening behind the scenes in the world of high finance. So, you have the bears pointing to the weak technicals and fading retail interest, and the bulls pointing to the surging institutional demand and a clarifying regulatory picture. Who's right? The market will give us the answer soon enough. But it's this very tension that creates the trading opportunities we're about to discuss. All right, this is where the rubber meets the road. How do we trade this market? Given the uncertainty, a one-size-fits-all approach is a recipe for disaster. So, I'm going to lay out a few different strategies tailored to different risk appetites. First, for the more conservative traders, this is a range trader's paradise. Bitcoin is neatly boxed in between $64,000 support and $71,000 resistance. The strategy here is simple. Look to buy near the bottom of the range and sell near the top. You could initiate long positions around the $64,000 to $66,000 area with a tight stop loss just below. Your target would be the top of the range, around $70,000. Conversely, you could short near $71,000 with a stop just above, targeting the lower end of the range. In this environment, patience is your best friend. Let the price come to you. Now, for the more aggressive traders, you're hunting for the breakout. A decisive close above $72,736 on the daily chart would be a massive confirmation that the bulls are back in control. This would likely trigger a cascade of short liquidations and send us significantly higher. A potential strategy here is to scale into a position. You could enter a partial long position now and add to it as the price breaks through key resistance levels. Your targets would be the next levels of resistance, which I see at $76,000 and then $80,000. On the flip side, a break below $64,000 would be very bearish and could open the door to a quick drop to the $58,000 to $60,000 zone. A breakdown trade would be to short on a confirmed close below that level. There's also an event-driven strategy for those who like to trade the news. As I mentioned, Wednesday's FOMC minutes are the big one. Volatility will be extremely high around the release. So if you're not an experienced trader, it might be best to sit on the sidelines. For those who are, the initial reaction is often a fake out. Look for opportunities to fade the initial move. If the market dumps on a hawkish headline, look for signs of support and a potential reversal to buy into. If it pumps on a dovish headline, be wary of a sell the news reaction. Finally, for the long-term investors, this noise is just that, noise. If you believe in the long-term thesis for Bitcoin and digital assets, then these periods of extreme fear are your opportunity. Dollar cost averaging is your best strategy. By investing a fixed amount of money at regular intervals, you take the emotion out of the equation and build a position at an attractive average price. With JP Morgan calling for a six-figure Bitcoin, accumulating in the $60,000 to $70,000 range could look like a stroke of genius in a few years' time. No matter which strategy you choose, risk management is non-negotiable. Use stop losses, don't over-leverage, and never risk more than you can afford to lose. The goal is not to be right on every single trade, but to stay in the game long enough to capitalize on the big moves. So, there you have it. The crypto market is at a fascinating crossroads. We have a battle raging between extreme fear and burgeoning institutional optimism. We have a market coiled tight in a technical range, waiting for a catalyst. And this week, with the FOMC minutes and ETHDenver on the docket, we just might get one. The short-term path is uncertain, but the long-term picture is arguably getting clearer and more bullish by the day. The transition from a speculative asset to a legitimate part of the global financial system is happening right before our eyes. Thank you for joining me on Boni's Life. I hope this analysis helps you navigate the exciting week ahead. Remember to think critically, trade smart, and manage your risk. If you found this video helpful, please hit that like button, subscribe to the channel, and share it with someone who needs to hear this. Until next time, stay curious and stay informed.